All right, guys, I'm a little late getting this on. It just sold from 93. It's at 91 now. It's essentially the same price, a couple pips away. But basically, just want to walk through the entry here, why the entry was taken on the dollar yen, and how we use previous manipulation in the market, or whatever you want to put a term to it. I'll have some people that take exception to the term market manipulation. You can term it whatever you like. Search for liquidity, testing other side of the market. Again, I couldn't care less what somebody calls it. The point is, are you making money from the setup? That's, I mean, at the end of the day, when it comes to trading, guys, you call it what you like, but are you making money? So in this case, why was I selling from 93 into that spike? Well, the one thing we know, and this is the dollar yen, the one thing that we can say for certain, and there's very few things you can say for certain in trading, but you had a number one, and again, feel free to disagree with me in the comment, and I'll be happy to reply to you if you don't understand why I'm talking about something in a certain way, or why, or maybe just think it's something else. So feel free to leave a comment and I'll reply, give you guys a little feedback on whatever question you might have. So we went sideways through here. This is just as a reference, these wider blocks, this is an hourly, so it's a little bit harder to differentiate them, but the wider blocks are Asia. That's from 5 p.m. going into 2 a.m. the next day, and that's Eastern time. Then the New York block, the skinnier block, is from 8 a.m. to 12:30 p.m., again, Eastern time. So you went sideways for nearly 8 days. I think it was like 7.5 days. And then you had this extremely bullish surge through that high. So what do you think happens in a move like that, where you go sideways for 8 days, you have a hell of a lot of trading within that period of time? Anytime your price action for the day is compressed into a tight range, now you're timesing that by 8. I mean, it's 8 days of sideways price action. You have a lot of trading that goes on through that range as a market or as smart money is accumulating that next position. What will often occur after that is you'll get a false push. That false push is a very strong indication of true intent in the market. Now, you don't know necessarily that's going to be a false push. What you do have is you do have the benefit of hindsight in this situation. You look back on it, and just like I talked about in the members preview last night, where we were talking about this, this setup, and actually in the room yesterday we were talking about it. This tells you something. This tells you that smart money is selling into the buying pressure. If they are selling into the buying pressure, then it's very likely that they were accumulating a short position through this range. They're not going to complete a reversal like that if they were not selling into that buying pressure. If they were buying through this range, it's very unlikely they're going to allow the price to slip back past their median entry price a great deal. And thus why I trust that move. So you get the false push, you get a full ADR length, even probably double back the opposite direction, not only retracing the actual false push itself, but retracing well beyond the median price range, which you're going to have through here. So what that does is that gives us a very powerful indicator of future market direction, because it gives us a very good indication that smart money is selling into that buying pressure. If they're selling into that buying pressure, then guess what? When it retests the area, the general area where that position was accumulated from, and especially in this case, and why I'm doing the video, when they're retesting it on news, it's a prime time for some short-term market manipulation. So you get this great GDP number. It's 3.2, great GDP number out of the US. That is the prime time to sell into that buying pressure, especially when it was not only were they proving selling pressure through here, but also as you spike the market up, what happens in that situation? Well, it's the same thing that happens here. The market spikes up, the retail market begins to buy, begins to chase into that market. Especially true as you're breaking through the highs, you get a retest of the highs, people expecting that level to hold. So the bottom line is you just get a lot of buying pressure as a market rotates to the upside. Think about any retail strategy. I just did a video on reactive versus predictive strategies, and most every strategy, if not every strategy you've ever traded, is reactive, meaning the market rises, that will cause a buy signal for you. The market sells off, that will eventually cause a sell signal. The market doesn't rise, and that's what produces a sell signal for your strategy. That's just not how it works for 99.9% of strategies. So by inducing that buying pressure, by inducing a rising market, they're even creating further buying pressure behind that, allowing them to sell into that buying pressure. While you might not know it's happening through that move, when you get the complete retracement, know you didn't trade that, but it's important information today. So when we spiked into the psychological barrier of 112, you had great news. That's inducing buying pressure. And you're spiking into a barrier, spiking beyond 112, psychological barrier. It just represents a prime location where they're going to sell into all that buying pressure. They're going to do the opposite of what you expect. There's a reason why you guys frequently say, and you said it, I'm sure I've said it many times when I started trading, God, it seems like the market turns against me immediately after I enter. That's not a coincidence, guys. It's a coincidence when it happens 50% or 20, 30% of the time. But when it happens 50, 60, 70% of the time, that's not a coincidence. There's a reason for that. This is the reason, because if you don't know what smart money is doing, then you're essentially trading blind. People look at the chart, and by the way, I am closing that position out. We're probably going to get more downside. I'm a short-term trader though, so I had a 10 pips risk on that position. Ended up with a 20 pip take profit and a little over 20 pips. I'll show you guys my orders here at the end. And just by the way, I did not get 93 on the entry. I got 92 and 3/10. I read that wrong. Apparently my dyslexia is kicking in. But on a serious note here, ended up with, let's see, what would that be? 21.6 pips. Again, I'll take a picture of the closing price as well as the exit on that position. But the main point behind this is not that I made money off this trade, because whether I make money off a trade or not, as I always say in a lot of videos, whether I make money or not is not relevant to you. When it comes to whether you're paying your bills at the end of the month, if I made $1 million or lost $1 million, it's not really relevant to you paying your bills. It's not relevant to you growing your account. What is relevant to you is taking this information, and the next time you see this type of scenario, being able to capitalize on it, get a good indication of when smart money is selling into buying pressure, buying into the selling pressure. The other and the last and kind of final point I'll make is that the chart, guys, the way I look at the chart is it's best explained by the movie Wizard of Oz. You guys have probably all seen the movie Wizard of Oz. And you have this guy that's they go in before the wizard and it's blowing fire and smoke and everything, and there's this hologram on the wall, it looks like, and eventually what they realize is it's just a guy behind a curtain that's pulling, a small guy behind a curtain that's pulling a bunch of levers, it's pushing buttons for the smoke and the fire. In other words, it was an illusion. The chart is just that. What I can tell you right now is banks are not sitting there behind the chart going, man, I see a head and shoulders pattern here. I see a bear flag or a bull flag or a symmetrical triangle, or here's this Gartley pattern setting up. They're not doing that, guys. They're simply looking for where the hell the liquidity's at. Their single job where they make the majority of their money is by facilitating trade. They're market makers. Yes, 10 banks control nearly 70% of the daily volume, but where's that volume coming from? It's not them speculatively buying or selling. What it is it's the overall cumulative larger market participants that are overall driving the market through basic supply and demand. So when you keep that point in mind, it gives you a very good indication of where smart money is likely to trade, because they're going to look for times, they're going to look for situations where they know that buying pressure has been created. Then they're going to sell into it. They're going to look for periods where they know the market's bearish, it looks bearish, everything's looking bearish. Then negative news comes out, and guess what? That's when they're going to buy into the market. So if you're not looking behind the curtain, if you don't know how to look behind the curtain, and you're wondering why you're losing money, you really shouldn't wonder, because if you don't know what the controlling forces of the market are doing, then logically speaking, it's going to be very difficult for you to produce consistent results in that type of situation. Kind of have a bad feeling this one might run for a bit more, but that's part of trading. You take your pips and you run with it. A lot of times you'll get some retracement, so I may have a second chance entry at this. A lot of times If you retrace back up into this area, right around where the close of that candle body is, I might consider another entry. It's a little more advanced in that situation. I even zoomed down to a slightly smaller chart to kind of get an idea of when we're seeing the reversal back. But whether that happens or not, still had a beautiful trade off of it. Nice full take profit, and more importantly for you, hopefully it provides something you can take away, some kind of ideas you can take away and use in your own trading, and hopefully make a little progress in identifying what smart money is doing. So if you have any questions about this setup, if you have any questions on further why I took the setup, feel free to shoot me an email, support@daytradingforexlive.com. I'll be happy to get back with you. You can visit the site, daytradingforexlive.com. Ton of information on the site, videos, articles, walk through the strategy, as well as further information on the bank trading course, the live room we run, the daily market previews, all that jazz. So again, I hope you enjoyed the video. We'll see you all back for the next one. Until then, happy trading.